Take us through a little bit the composition of where that outperformance was.
Sure, absolutely. So investment bank and FIC both up 11% year on year, and that's against what was already a good quarter last year. We think it's across the board, frankly. There's really only the rates complex has been down given the market environment. Even there, we think we've been winning market share. But our credit complex, emerging markets, and also FX all performed well this quarter. I think it's the cumulative impact of investment that Ram Nayak and his team have been making over the past several years. So we're very pleased with that performance.
And how are you seeing developing it now in the fourth quarter? And are you expecting that to sort of ramp up? We have a sort of knife edge U.S. election, very hard to call. Is that going to sort of be a boon to trading as well?
Well, look, we're off to a good start in the quarter, so that's encouraging. We think the conditions of the third quarter have carried through without the volatility, incidentally, that we saw in August. Usually, we see strength around a U.S. election, as investors and also corporates need to position and react to changes in the markets and expectations. And so that's what we'll expect to see really once we get past the milestone on November 5th.
Right, and also this year was marked by sort of a lot of provisioning for the Postbank situation that you're still dealing with. You're still awaiting a court ruling. We got some of that money back. Is it enough to justify a buyback this year? I know that you've asked for the authorization, or is it going to be more into next year? Can you give us clarity on that?
Yeah, so we have applied for authorization for a further buyback, which would be executed in 2025. Okay. The Postbank provision, we've seen a release this quarter, which is good on the basis of settlements that we were able to finalize. We have a court case today, actually this morning, so we're expecting more news on that. Hard to say what the direction is, but it's certainly been supportive. We think we've reacted well to the setback that was the court's sort of expression back in April. And it's gratifying to have gotten through that with strong capital and now with settlements behind us, a mitigation of the income statement impact.
And looking at that buyback into 2025, what sort of size are you aiming for?
Well, we won't speak directly to size, but we've laid out a sort of a capital plan, which is of increasing levels of return to our investors, representing a normalization, in some respects a catch-up, which we expect to achieve over the next couple of years relative to peers.
And also noticing that provisions were up, but interestingly down massively in commercial real estate. Can you talk us through that a little bit?
Well, yes. So provisions have been influenced this year by a few transitory effects, all of which we expect to either ameliorate or cease next year. One has been the impact of the Postbank integration. Second have been a couple of larger corporate defaults in Europe, which in our case were hedged. So the impact to shareholders, if you like, was moderate. But as you say, commercial real estate has been going through a cycle that we've been living with. We actually called relatively early for a stabilization in that credit environment. We've seen that continue in the third quarter, whether that's driven by interest rates, the economy, now interestingly lease activity, and of course the indices that you can see publicly. All of those things tell us there's a stabilization. For us, we were down by over 34% or so in provisions in commercial real estate. And actually that included a sort of an acceleration based on a sale that we're contemplating of some valuation adjustments. So we feel that trend is well established now.
And talking of sales, it's been a big quarter also for M&A within Germany. Your origination advisory business up 25%. You've been able to capitalize on that then?
We have. Sort of our market share this year, I mean, we're up significantly, over 50% this year on last year's revenues. With that, a market share gain to around 2.6% so far this year. That's encouraging. Mm-hmm. The wallet was a little bit softer in Q3, but we think that was sort of seasonal and temporary. The momentum is there, and we look forward with the investments that we've made in our origination advisory franchise to participating and further improving our market share.
And I wonder what it tells us more broadly about the German economy, because a lot of this M&A has been incoming to Germany and not sort of going out. Is there sort of a sense of Germany for sale a little bit, particularly with the weakness in the economy?
I don't see that at all. I think it's actually both ways, and whether it's M&A or just the foreign direct investment that's taking place, we see certainly two-way flows. I mean, Germany always has some sort of interesting features around sort of private middle market companies, sometimes selling strategically or to private equity, and then our large industrial companies making investments abroad. That has been the trend. I don't see that necessarily changing.
And then also on the question of M&A, obviously will not have escaped your attention what's been going on to Commerzbank down the street. And obviously there's been a lot of talk through the years about Deutsche Bank, Commerzbank potentially getting together. You obviously observed what's been going on. You considered getting involved, opted not to. I'd just like to get from you kind of the sort of process of what you observed and where you ended up in sort of the decisions you made.
Well, look, we're always looking at our option set, as any sort of well-managed company should. And domestic consolidation is clearly on the list of things that you would look at as you observe your option set. We've been, I think, pretty consistent in saying the industrial logic for bank mergers makes sense, but that we needed time to be fully ready, and that time hasn't come. And so we're focused on executing our strategy, focused on delivering against promises we've made to our shareholders and stakeholders. And it's sometimes nice not to be distracted by other things and just execute, as I think the third quarter and the year to date showed that we've been focused on execution.
But then I guess, if this were to go through with UniCredit and Commerzbank, it would make an entity larger than Deutsche Bank. We've obviously had consolidation in the Swiss market. We also have BBVA, Sabadell. So this is really a moment for European consolidation. I imagine that makes you sort of reflect on your position, not only within Germany, but within Europe. Where does Deutsche Bank what space does it want to occupy in that landscape, in a landscape that is more consolidated with bigger banks?
Well, let me start by saying we intend to remain number one in Germany, and we think that consolidation here doesn't really change our competitive landscape. Germany is a very competitive market as it stands, and we compete against both Hypovereinsbank, that is UniCredit, and Commerzbank in our home market. So that doesn't change much. But your point is one that we agree with. We think Deutsche Bank is positioned to play a leading role in European consolidation. We think that scale in banking, especially in the regulatory environment we live in today, is something that's important and something we observe again in competition with our U.S. competitors as a strength. So in time, absolutely, we see that. Taking place, and sometimes the first few transactions sort of set off a wave, and I think that's what you're getting at, and we certainly believe that begins.
So when do you think the moment is ready for Deutsche Bank to sort of exit this kind of turnaround mode and into a sort of slightly more aggressive, more maybe acquisitive, more sort of proactive mode?
Well, look, I don't want to set a clock because it's always hard to say. But look, 25 is an important milestone year for us. I mean, we've been working hard over the years through the transformation of the company to position us as exceeding, in terms of performance, exceeding our cost of capital, showing a sustainable picture to our shareholders, resolving the remaining control and other investments that we needed to do to make, being on the front foot competitively. We think we're well on our way to that, and next year is an important milestone for us.
And from the sort of uncertainty around Commerzbank, have you been able to sort of acquire clients over the last couple of months, and do you expect that to happen if there is in fact a takeover?
Look, it's always helpful competitively when two competitors are distracted by corporate events. That creates opportunity. We're ready to capitalize on that opportunity. As you'd expect, discussions take place, but I'd say it's early days. We think we're very well equipped as the leading bank of Germany with our capabilities, our international network, our product capabilities, and also our relationships to support the German economy and to be the leading bank in Germany.
And there's also a new commission within Europe being led by Mario Draghi in his competitiveness report. It seems like policymakers are more receptive to advice on how to make things more competitive. So if James von Moltke were able to bring sort of one change at the EU level to make banking in Europe more competitive, what would you suggest?
Well, what's now called the Savings and Investment Union and the Banking Union, we've been advocating for years, and I personally believe in it because the size of the market, and again, given all of the industrial logic we talked about a moment ago about M&A, is furthered by those types of changes. And we all see the need in the economy for financing of the green transition, of the digital transition, of infrastructure investment, public deficits, and these are things that the banking industry would be better equipped to be able to serve if those reforms came through. So we're pleased with what we see, both in the new commission, in the mission letter for Commissioner Albuquerque, or Commissioner Designate, and also in the Draghi report. This is an important moment for Europe to sort of grasp the nettle and move forward.
And an important moment also for the United States, an election just a couple of weeks away. What are clients telling you about how they're preparing themselves for the outcome?
Look, almost any way the American election comes out, I think there's a recognition in Europe that we need to be more agile, more dynamic, more competitive, not just against the United States, but also against a rising Asia. And that's, I think that's very clear. Our clients are reading the newspapers and understand some of the policy differences that are likely to come out of an election one way or the other. Of course, the congressional election is important too in this context. So I think people are aware of the change, getting ready for what lies ahead. I think most importantly, tariffs, and we've been through that before in Europe, and so that the trade relationship that we have with the United States, but also with China, is going to be an important feature of the post-election period.
And just a final word, obviously we've been waiting for the comeback in the German economy for what feels like more than 2 years now. Do you have any sort of reason to be optimistic that that is imminent, or do you think that we are kind of going to be slogging through for a bit longer?
Look, we've been frustrated, and that the recovery has taken so long. You know, the transition that the German economy is going through around exports, currency, energy prices, all of these things is significant. However, we had been expecting growth to begin to accelerate in the second half of this year, and that doesn't seem to be the case. Our economists are calling for about 1% growth next year in Germany, and I think that's still a fair case to expect. But that transition has been longer and tougher than we might have hoped for. Again, it ties back to, I think there is a policy mix that can help unlock some of the growth potential and accelerate this adjustment.
And what are those you think those policy points that would help do that?
Well, I think first of all, the burdens of bureaucracy. I think most, not just financial institutions, but corporates would tell you that there needs to be sort of a moderation of that. There are fiscal incentives that can be put in place. There is support for venture capital and some of the investing. Securitization is a big item within the financial sector reforms that we would advocate. So there's lots to do without asking taxpayers for more money. So that very often things get stuck on government funding, but we think there's a whole lot that can be growth stimulus without the need for additional fiscal support.
Some budget neutral things that could happen to really turn around the German
budget
economy.
beneficial insofar as it generates tax revenues.